Hello folks, this is Raj Sastry from Raja Option Trading. Today I will talk about my favorite e-commerce stocks. Everybody loves to shop online. So this is one of the key major trend in the market. So one of the famous quote from World Health Organization is the likelihood of a person getting COVID from a package is very low. So that's a good news for these e-commerce stocks. So with that, let's dive in and look at some of these companies and see why they make sense. So here are my top e-commerce stocks. Number one is Overstock. Number two, Fiverr. Then Jumia, Parts.com, Farfetch, Pinduoduo, LightInTheBox, Etsy, Chewy, Wayfair, Carvana, Dada Nexus, Shopify, MercadoLibre, Blue Apron, Takung Art Limited, JD, Vipshop, iMedia, Baozun, Amazon.com. So one thing that notice, I don't have Alibaba and BigCommerce because mainly off late the performance of these stocks have gone down. They used to be very high performance in the beginning, but now the performance has gone down. Doesn't mean these stocks are not good. They're good. I would buy these when they're down and keep it for a long time. They didn't make the list because performance was relatively low. So with that, let's look at some of these companies and look at the investment thesis for them. So starting with Overstock.com, ticker symbol OSTK. They're at about $4.16 billion. They are a technology company and they basically sell wide variety of high quality products. And they also have a very good customer service. And they also pivoted into Bitcoin and blockchain technologies, as many of you might be knowing. These guys are very versatile. In the beginning, they used to sell basically apparel, clothes, but now they pivoted into furniture. They're also into crypto and blockchain. So they kind of see where the market is going and they try to be ahead of the market. So 92% approve the CEO, Jonathan Johnson. And if you look at the stock chart here, your stock has been doing very well and they have some bumps, but they come back pretty quickly. So now the stock is around $97 and they got a good amount of cash, 531.06. Debt is lower, pretty low for a company of this size. And if you look at the market cap, they've been increasing the market cap. So 278, 201, little bit down there, but then 1.15, 3.11, now all the way to 4.16. That tells me this company is really grabbing the market share from competitors and growing very well. And if you look at the revenue, they've been surprising the market with the revenue surprise. They had two down quarters here, but afterwards the revenue itself 109.40, 110.79 at the rebound from coronavirus. They did very well. And revenue also is very good revenue numbers they're putting up. And EPS also, they've been surprising on the EPS side with the positive surprise, except for one quarter here back in December last year. And very healthy gross margin, as you can see here, 22, 23, 21, it's the lower 20s, which is not bad for a retailer. And net margin is also positive. They're really making money last two quarters. So with that, the reason I like blockchain is really they got a good double-digit or even triple-digit revenue year-over-year revenue increase, and they got a double-digit gross margin. That's the recipe for success. On top, these guys are also very versatile and they adapt to changing situations very quickly. So next is Fiverr. Fiverr is about $10.52 billion company and they have a mission to really change the way world works together. Think of like a freelance type marketplace. You might be in any geography, any country. You can basically connect with a need from a customer very quickly. So a lot of people love freelancing, and this is a marketplace for freelancing. It's the biggest, one of the biggest. And 96% approve the co-founder and CEO, Mika Kaufman. It's based in Israel, but it's an international company. And if you look at their stock chart, they don't have a 3-year history yet, but the stock took off like a rocket ship, as you can see here. And the stock price is about 299.18, and this stock is not showing any sign of quitting. It's really doing very, very well. And they got a good amount of cash, and debt is low, as you can see here. And if you look at the market cap, really last couple of quarters, market cap has been, almost doubling or more than doubling. And now they're at $10.52 billion. This tells me these guys are really, really doing very well. And competitors like Upwork and other companies, they don't have too much chance because these guys are doing superbly well. And from a revenue perspective, they are doing very well. 29.53, 34, 43. I mean, these guys are putting up like, 81.88% revenue growth, 87.84, really, high double-digit revenue growth, which is very good. And they're surprising the Wall Street, on the both revenue front as well as the EPS front, which is very good. And gross margin is very, very healthy. This is typical of a recurring revenue software company. 83%, 83, 80. I mean, it's very good, gross margin. And net margin, I think they are a little bit negative right now, but you can see, they might get positive anytime soon. This is mainly because it's a startup company. They're investing heavily into their own product, and making sure product is superb. So with that, I would recommend Fiverr, for a long-term play. A very good company. Next is Jumia. Jumia is really a leading Pan-American e-commerce platform. Think of like a eBay or Amazon.com for Pan-African companies. So with that, these guys are into, they're based in Germany, but really, Pan-African e-commerce platform. And 99% approve the co-founder and CEO, Jeremy Hodara. And as you can see, stock is doing very well. They had a little bit downtime, a little bit here back in January and May timeframe, but they bounced back. This company is really good. Sometimes they go down big time, but they bounce back pretty quickly. And they got a good amount of cash and lower debt. So with that, from a market cap perspective, they have been improving the market cap. As you can see, they had a little bit down here, but afterward they've been improving, and now they're at $5.27 billion market cap, which is very good. From a revenue perspective, there have been negative surprises. As you can see here, negative here, and they also year over year revenue is also a little bit lower. And EPS side, they were surprised here. Gross margin is pretty healthy, and net margin, as you can see, they're still losing money. Even though year over year revenue is negative, I chose this company because they have very good potential going forward, especially in the African type area. 14 countries in Africa. I think there is a very good case to be made. These guys have opportunity to take on that whole African market. So with that, let's jump into next set of three companies. Next is carparts.com. So it's a $965 billion company, and stock price is about 19.99, which is a low dollar amount. And 74% approve the CEO, and these guys really provide the car parts and make it easy to get the car parts from e-commerce portal, and they also have very good customer support. And because these days people want to do DIY, do it yourself, and they also have some of these pro type companies. They really take the opportunity to provide this web technology and user interface to buy very easily. So with that, stock, as you can see, are doing very well. They had a little bit slower start, but now they're caught up. They're doing very well now, and they got very good amount of cash and a little bit debt, not too bad. And from a market cap perspective, you can see here, they're growing very nicely from a market cap perspective, and now they're at 965. So it's a very good, slow and steady type growth. And they got revenue, as you can see here, positive revenue surprise last couple quarters, and they also have double-digit revenue growth. This is one thing I always love, companies with the double-digit revenue growth. And EPS also they surprised a couple times here. They missed it once. And gross margin is pretty healthy, as you can see here, 36, 34, which is very good. It's around mid 30s. And net margin also positive in last 2 quarters, which is a good sign. They're really making money. So with that, if you are if you don't want to invest in high price stocks, this could be a good play, on the auto industry. So next is Farfetch, FTCH, $22.44 billion company, and they're into e-commerce platform for the fashion industry. For example, you might have some good brand item in your closet, and you might want to sell it. So this is a place where people can sell their second-hand, authentic products, and there's a very good marketplace. And they're working with multiple boutiques, multiple countries, and they focus on the best brands and very good high margin business. And 96% approve the CEO Jose Neves, and this is based in UK. And stock price is 66.03. And for this company, as you know, there are some competitors. The latest one is Poshmark, and they have one or two more competitors, but these guys are doing very well. And stock price, as you can see here, in the beginning they had some bump, but now they're doing very steadily, very well. And from a market cap perspective, clearly, they're doing very well. In the beginning, they had a little bit bumpy ride, but now they're doing well. 2.69, 5.87, 8.55, now 22.44, which is a very good growth from they're grabbing market share. And from a revenue perspective, they're, positive revenue. Year over year revenue is very good. They're into 95, 90, 74, 71. As you can see here, there is you could make a case that hey, the revenue growth is decreasing, but this is a retail industry, so you can only put up so much revenue growth. In the beginning, the numbers are smaller, so you can put up a bigger growth, but as numbers become big, this is a good growth to have. And they've been surprising on the revenue front with a positive revenue surprise. And on the EPS, they had been surprising very well, with the exception of 1 quarter here, which is 331. And gross margin is double digit. I like this also. And net margin is negative, mainly because they are making sure their product itself is superb. So with that, I love this company mainly because the positive highs, low 70s revenue growth, and positive double-digit gross margin. And this is a very good market to be in, because a lot of people want to buy these authentic second-hand type products. So next is Pinduoduo PDD. It's again a China-based company, 201.39 billion. And stock price is about 201.63. And this is a very famous company in China, and they also have a mobile platform that offers a range of products. They also have some social type platform which also tries to sell some of these products. So with that, their stock chart is really very nice. They've been doing very well, consistently going up, and they have very good cash, 12.43 billion, and low debt. And if you look at the market share or a market cap, it's improving steadily, as you can see here, 41 or no 2, 88. I mean, a little bit up and down, but overall now they're at 201.39, which is very good. And revenue itself, this is a very good revenue growth. 83, 35, 70, 101. It's a very good year over year revenue growth, for a online play. And they've been surprising Wall Street with the positive revenue surprise and positive EPS, with the exception of 2 quarters here. And very healthy gross margin, 77, 78, which is very nice. And they're still not making profit. Their net margin is negative. So with that, this is a very good stock to invest in the future. I really like it. It's a way to play China's huge population. With that, next set of companies, one is LightInTheBox LITB. They're about 549.34 million. And this company is really online retail that delivers products. It's a little bit newer company to over 200 countries. And their CEO is really, 59% of the employees approve their CEO, and their China-based company. Stock price is very low, as you can see here, 4.92. And off late stock has, is doing very well. And that's one of the reasons I like it. Stock has been doing very well, and a low stock price. There is a lot of room to grow. It is still $549.94 million, which gives it a lot of time to grow, a lot of room to grow. So with that, from a market cap perspective, you can see here they've been grabbing the market share, 65, 94, 215, now more than double. So which is very good. Year over year revenue, they've been putting up a good revenue here. In the beginning, they had some negative revenue growth, but now they're positive. And EPS also, it's very good EPS growth. This is actually gross margin here. Gross margin is also high, low 40s, which is very good. And net margin is also now they're positive, which is good. They're really making money. So with that, this is a good company. If you want to invest in a low price stock, this is a good company to go. And next, let's look at Etsy. Etsy is really a global marketplace for unique creative goods. If you're a craft person, you like unique products, you can buy it from Etsy. And they also pivoted to homemade masks. That's one of their biggest seller a couple months ago. And they're about $27 billion company. 91% of the employees approve the CEO, Josh Silverman, and they're about $220. As you can see, our stock is doing superbly well. They've been, in the beginning, it's a little slow start, but now they're doing really well. And if you look at the market cap, they've been continuously improving the market cap. That shows people really like their product and they're grabbing the market share from competitors. And from a revenue perspective, they've been putting up very good revenue numbers here. As you can see here, more than 100 percent year over year growth, which is very nice. And they've been surprising the Wall Street with their revenue surprise and EPS surprise. Except we have one quarter where EPS surprise is negative, but otherwise they've been doing very well. And very nice gross margin, 73, 74. And they're also making money, so they get to keep some of their money toward their profit, which is very good. So with that, I feel like this company is a very good company, and there are a lot of people who don't want to shop other places. They want to buy creative items. That's where Etsy can come in. Next is Wayfair. Wayfair is very good, the home furnishing type play online. So people love to buy things from Wayfair because they got very good returns policy, very good product, a lower price. So with that, 73% of the employees approve the co-founder CEO, Niraj Shah, and they're about $27 billion company, $269 market share price right now. And stock, as you can see here, it had some bumpy beginning bumpy beginning. Now they're doing really well. And these guys have also competition for folks like Restoration Hardware, even Overstock for that matter. A lot of people are trying to pivot into home furnishing. These guys are doing very well when it comes to e-commerce. And from a market cap perspective, as you can see here, they're doing really nicely. Very nice improvement here. 5, 18, 27 billion. Now it's 27 billion again. So I think that's a very good. They're kind of keeping their momentum and doing very well. They have been surprising the Wall Street with their positive revenue surprises and also positive EPS surprises, except for one quarter here. And they got double-digit gross margin. Net margin is also positive. Combination of year-over-year growth, which is high, and gross margin, which is positive, and net margin also positive, gives this a good mark. So I would recommend this stock also. Next, we'll go to three more. Next, we'll look at the stock. Basically, this is a list which we kind of selected some companies to talk through. This is the entire list. So if you see here, all these companies have got very good 1 year performance. I kind of descending order. I ordered them in the descending order, starting from Overstock, which had 1088% all the way to Amazon.com, which has 53.12% growth over last 1 year. The companies highlighted in black, bold are my favorites. Even though one of the company here has a negative revenue growth, which is Jumia, has got some negative 17%, because this company is known to have these hiccups once in a while, but overall it does very well. So with that, now let's go into some of the performances, monthly performance, and see how these companies have been doing last couple of months. Overstock, we just talked through this, very nice, positive, monthly performance, as you can see here. In the beginning, they had some bumps along the road, but now they've been doing very well. And back in March, April timeframe, COVID scare, they kind of went down, but no, they picked up very, very nicely. And Fiverr is consistent, steady Eddie type stock, which has been doing tremendously well. Jumia, I talked about it. They had some hiccups once in a while, but overall they bounce back and do very well. This stock normally I pick it up when it's down, like here. Then normally it always bounces back. Parts.com, this is also car parts doing very well, as you can see here. Some bumps along the road, but always bounced back. So with that, normally I look for stocks which are consistent, and even if they're down, they have ability to bounce back. That's what I look for as I scan through these monthly performances. Next, let's look at some of the bigger companies here like JD, Amazon.com, Baozun. These guys are doing well, but the performance itself is not as great. Like smaller companies, because these companies have grown so big. So with that, just to sum it up, right? So these companies which are highlighted in the bold are my favorites. I would either buy the stock outright, or I would also buy maybe say 90-day call option, or even more than 90 days, maybe Delta 70 type call, and hold it for maybe say 90 days or even longer. So that will give you enough growth, and then you can buy something else. So with that, happy investing. Thank you.